Hello, traders. Cousin Vinny coming to you from theclosingprint.com, October 29th, 2023. In this edition of your weekend video newsletter, we'll discuss the negative gamma environment that we find ourselves in, which is creating a risk-off condition in the short term. S&P spiders and S&P put walls aligned at 410 and 4100. However, the extraordinary amount of symmetrical gamma at 4,000 has the market out of balance, something that we need to consider going into this week of trading. The S&P spiders show the condition that we are facing at the moment. Red bars building again. There was a point where middle of October it looked like we were going to start to move above the zero line like we did back in May and June. However, the weekly shows a similar condition where we have two red bars on the weekly time frame. So that has to change markedly. And we don't estimate that it'll do it very quickly. So risk off environment to start the week. We have 4,100 and 410 that held on Friday. The Qs as well are right above support. We got the 200-day at 338.54. There is a possibility of a test. Stochastics is oversold. MACD is ready. If we do have a turn, it should be very obvious, with most of the tech stocks pulling back and anticipating buyers at key support levels. In addition, we want to see small caps catch a bid, continue to show risk off. As price action proceeds down to the previous lows that we saw back in 2022, anticipating that we'll stay in this range. If we lose 159 and see additional distribution days, that would set the stage for additional weakness. If you started hedges, as we mentioned over the last few weeks, we'll stay with those hedges until we get a nice confirmed bounce with bullish volume exceeding what we saw over the last 4 weeks. Then we might have a trade going into the seasonally strongest months of the year, November and December. Starting off the week, we had the S&P Equal Weight Index drop below the March support. Now we're back to a similar oversold condition, looking for a bounce. Hedges continue to work, with SPX following through, SPXU also, with volume picking up as the markets continue lower, with similar action in small cap TZA as a hedge. You can see the volume and traders attempting to neutralize their portfolio from the current drawdown that we're seeing in the markets. Hedges are always listed in the watch list down in the lower panel. If you need to protect your portfolio or get to more gamma neutral, these are candidates we utilize. The 10-year yield starting to show some distribution at highs, with the knowledge that Ackman covered his short, which translated into some basing on TLT, the 20-year ETF. Looking for that to continue or be denied, along with a range-bound condition in the US dollar, with the thought that a break above 107 would be very bearish for the markets in the short term, whereas a move to the downside would be considered somewhat bullish in the short term. Commodities like gold and silver have seen volume pickup over the last few weeks, indicating there might be a test of that 2085 level in the short term. There are wicks on the top of these candles at resistance, so we need to see a confirmed breakout above 2020 to get to those 52-week highs. If you're considering any of these precious metals safety trades into year end. Crude oil consolidating right around the 90 level. We had some selling last week, while at the same time seeing a rally in some commodities. This is the Deutsche Bank Commodity Index Tracking Fund. Looks pretty bullish, with stochastics and MACD looking like it could follow through. So with price action moving back above the 50-day, potentially testing the recent highs if you're thinking of another area to hedge We might be able to do it with commodities, along with some of these oil funds that look like they're going to follow through. Volume picking up, looking for a retest of the highs. While economically sensitive metals like copper continue with its range-bound action, lifting off of recent lows over the last few trading days. Not much to say about sectors. Notice the 21-day and the 50, the blue and red lines respectively, continue down and to the right. Energy was the only sector that was managing to stay above a few weeks ago. Now we've pulled back as well. So it looks like capitulation in the markets, though can't really tell. So we're looking for a bid in the markets. We currently don't see anything other than a risk-off condition to start the week. So be safe, hedge if you need to, and wait for a bid in the markets if you're thinking about anything on the long side. Looking at stocks for the week, the IBD 50, stocks that are showing relative strength at new highs, and also stocks on a bullish scan. Volume showed up on Amazon. After earnings caught a bid, the stock moved up to the 21-day, got rejected just below the 50-day. Watching for stochastics and MACD to turn volume. If it does show up again on Monday, that's going to be a confirmation on a second day. DBO, the Invesco oil fund, looks pretty bullish. Stochastics MACD turning, volume was above average. If energy and oil continue to bounce, look for this to follow through as well. Another ETF, First Trust Global Tactical Commodities Strategy Fund, looking bullish. Volume was well above average on Friday. Look for a follow-through and a push through the 50-day. A relatively inexpensive way to trade the bullish trend in commodities. And another way to hedge. Some of the coal stocks like Warrior Met continue to show signs of a bounce. Stochastics and MACD turning. Volume was above average. That's HCC, Warrior Met. Intel with an earnings surprise. Nice bounce. It did get some selling on Friday. If we follow through and stay above the 50-day, that would be a good setup with a stop underneath the 50-day. Volume was above average on Friday. RSI, Stochastics, and MACD are set up and ready to confirm. PennyMac Mortgage Investment Trust. Nice volume on Friday. A big gap up. Friday with a close above the 50 and the 200-day. RSI is rising. Might be something here. With MACD and Stochastics rising. Scorpio Tankers along with Frontline and International Seaways, those are all starting to show signs of a follow-through. With bullish action on STNG on Friday. Above this pivot, we're probably going to see 61 in the short term. 4 or 5% higher. MACD and Stochastics turning up. Volume picked up on Friday. Frontline delivers oil and gas globally. Trending. Looks good. International Seaways from previous watch list breaking out on the daily. Looking good. Volume picking up. MACD and Stochastics rising. Weekly time frame shows a cup and handle breakout. So take the depth of the cup. That's about 10 points on top of this. So maybe 57 in the short term, about 10-11% from the current level. TK Tankers with above average volume over the last 5 trading days continues this breakout, looking for a follow through. Weekly time frame. Flat base, looking for the breakout. Depth of the base. Add that to the highs, about 10 to 12 points on upside potentially. 58 to 60 in the short term. Volume picking up. That shows institutions were picking up shares last week. LPG Dorian, they ship liquid natural gas globally. This one's been on the watch list over the last few weeks. Looking for a follow-through. So I'd be looking for a pullback for a potential entry if you didn't take anything over the last few weeks when it was first mentioned. Alpha Metallurgical Resources. A number of these stocks showed up on a scan. This looks for stochastics oversold and turning higher. You can see the last time stochastic was oversold. No indication that this will do this again, but when stochastics is oversold, we look for a rally like we had back in July after the pullback in AMR. Stochastics turning, giving us an indication there could be a bounce in the short term. You got to see it first. and then go with it. If MACD turns, that'll be a function of price. So watching all these indicators for the turn, with Amazon showing up on this oversold stochastic scan, giving us an indication with volume. If we do follow through and Amazon sees above average volume, anywhere above 50 to 60 million shares, and we get above the 50-day this week, that would be an indication of a potential follow-through into the seasonally strongest months of the year into year-end. Booz Allen Hamilton, a doji right at the 50-day. Stochastics oversold, looking for the turn, looking for volume to pick up. We had some distribution last week with price action managing to hold on to the 50-day. Keep an eye on Booz Allen Hamilton. Boise Cascade and some of the lumber stocks been fading for the last 8 to 10 weeks. Stochastics and MACD starting to turn. Volume was above average, so that could just be shorts covering. It needs to get back above the 50-day. That'll probably take a week or two. But this one looking interesting. Capital One Finance. Many of these payment processors and credit card companies are bouncing, showing above average volume. With the beat in earnings, this one gapped up on Friday, well above average volume. CTA, Simplify Manage Futures Strategy. This is an exchange-traded fund that seeks long-term capital appreciation. We're looking for the 50-day to hold, volume to pick up. It's a pretty low volume trading instrument. Stochastics turning, MACD, and RSI just below 50. Watching some of these futures-related strategies, ETFs that are managing to hold on to the 50-day despite the relative weakness in the markets. Deckers Outdoors followed through last week with a bounce, noting the number of institutions accumulating positions increased by 5% from the June quarter into September. Earnings projected to increase from $19.37 per share in the current year, projected to increase over the next 2 years 36% to $27.06 into 2025. With Deckers Outdoors showing up on the blue dot scan as a result of the gap up on Friday and the above average volume, relative strength was very apparent. Many of you are aware of this in the trading room on Friday, and now looking for some consolidation up near a previous breakout level, 568.47, into the seasonally strongest months of the year. Deckers Outdoors joining the IBD 50, with the company showing strong relative price strength and top-notch fundamentals. With that in mind, we'll most likely look at Deckers over the next few trading days and consider it for an addition to the portfolio for a trade into year-end. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com, October 29th, 2023, with your weekend video newsletter. Now, remember, we are in a risk-off state, so we'll be watching for some of these stocks that we just mentioned and for the S&P to hold in this area near 4,100 or 410 SPY. So you should be proceeding this week with a bit of caution, more so than usual, as we took out the March lows on the indices as well, as we look for institutions to give us direction to start the week. I'll send out a watch list later tonight around 11:30, 12 o'clock, midnight on the East Coast, around 9 o'clock on the West Coast, so be sure to check your inbox for that. Otherwise, proceed cautiously, take care, and we'll see you in the morning. Ciao.